But no, for me, I didn't have any of the data. I didn't have the background or the education as you have, which is fantastic, right? Like you can articulate in a different way because of your education and your PhD. For me, it was always street smarts and figure it out as I go. And I got really good at reading people
Mm.
to be able to talk to them in a way where they didn't feel like they were being talked down to. I talk to everybody as if we're equals because we are.
Hmm.
Somebody is better at something than I am, and I'm better at certain things than they are, but we're all just humans. We're all just equals and good at certain things that we're, experts at. But in raising money, I have just found that
I would like to take a 10-minute break and then three, two, one.
how do you have the ability to analyze stocks? Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck, and I'm just going to be honest with you. If you don't enjoy today's show, I don't even know why you keep coming back because this guy, his name is Adam Gower, and he is phenomenal to have a conversation with, as you are going to hear shortly. This is really deep into a guy who has raised hundreds of millions of dollars, been involved in over $1.5 billion worth of transactions in his career. Like, story's amazing. So before I do that, you're going to hear some stuff in this show specifically about raising money, deals that he's done, deals that I'm, working on currently. Straight up, if you want to talk to me about investing in a transaction that I'm working on specifically, or you want to talk about a transaction that you are trying to raise money for yourself, reach out to me. Send me an email. Usually I just throw out my website here, but send me an email. Derek@globalgow.com. Put in the subject line, podcast, raising money, something along those lines, and let's chat. So there it is. Let's bring on our guest. This one is going to be awesome. And here he is, all the way from sunny California, Mr. Adam Gower. Thank you so much for being on the Generations of Wealth show.
It is a pleasure to be here. I'm looking forward to the conversation, Derek.
Well, Adam, I already butchered your name. I apologize. It's Adam Gower, and
It's
as my regulars know, I don't edit shit. So
fine.
I screwed that up right from the get-go, and I literally talked to Adam. I said, "How do I pronounce your last name?" And I jacked it up already.
It's
So
all right. No problem at all. All
that's
good.
on me, and that will be in the show. So, Adam, tell
Sure.
the world about yourself, and we'll jump into an awesome conversation.
All right, fine. So I'll try and do this briefly. You've actually asked me to talk about my favorite topic, which is, of course, me. And I can talk for, hours and days on that topic, but I'll try and keep it brief for you.
Sure.
So my life in real estate started in 1982. I don't actually like to admit that because it makes me sound really old, but I
Mhm.
started pulling wires for an electrician. And very soon after that, I ended up working for a ground up multifamily shop in Southern California, raising capital for them. Somehow I had a knack for it. Didn't really realize it, but I had a knack. And so they hired me to raise capital, and I raised about $30 million for them. That was in 1980s. So in those days, that was a lot of money. It's
Yeah.
not so much these days. And then there was a massive downturn for those who are old enough to remember the savings and loan crisis, and everything imploded. And so I ended up going to Japan. I'd raised a lot of money in Japan and helped my investors through the issues they were having with the investments that they'd made, and was eventually hired by Universal Studios, actually a JV of Universal Studios and Paramount, to develop their real estate across Asia Pacific. So I was hired as president of Asia Pacific. I was very young and built up a significant business over there. I had a $400 million budget, and I was there for most of the 90s. I came back, I started doing my own developments, ground up developments.
Mhm.
And in '07, sold out. I got kind of lucky on timing right before the global financial crisis. And in 2000, about a year after I sold out, I'd been looking for deals and trying to buy some distressed stuff. And I was actually hired by a major bank to help them clean their balance sheet of non-performing real estate collateralized loans. So I worked on a probably over there, I want to say about a $6 billion portfolio and sold non-performing loans individually to investors. It was a very interesting time. I had a lot of fun doing that. Then I migrated to Colony Capital. I'm missing a couple of things in between, but I migrated to Colony Capital and worked on, again, $6-7 billion portfolios in partnership with the FDIC. So these were all loans that had been harvested from failed banks.
Okay.
And my job over there was to package these loans and sell them to investors and then eventually to other banks. In 2000, and then the worst thing happened and the economy got better. So all this distress stuff went away, and I started doing some seed and angel investing in little startups. Nothing at all to do with real estate. But there was a common thread, Derek, that ran its way through all these wacky little startups. And the common thread was the language of digital marketing. So, these were young kids, basically, early 20s at university that had these great ideas. And I didn't really understand this language, but it was intriguing to me. And then the Jobs Act passed. And the Jobs Act allowed for general solicitation. And I realized, and I've raised probably 500 million myself in total throughout my career. And I realized that for real estate, and I realized that for the first time in generations, it was going to be legal to basically to advertise to raise capital for real estate. So I put two and two together and I figured, okay, we can now advertise or do marketing online. And I understand the language of digital marketing. So I put these two things together and formed Gower Crowd. And so what we do today and have done for the last 12 years and more is build digital marketing systems for sponsors who want to raise capital from accredited investors. And our clients manage in total probably 45 billion of AUM and have raised over $1 billion with minimums as low as 25,000. How was that? About 5 minutes ish.
I mean, it was okay. You want to start over and try again?
I can make it longer if you like. I'm like AI. Make this longer.
Yes. No, there's so many things that in different rabbit holes that we could go and dive into there. But I think the one that intrigues me the most is raising money. And here's why. I've raised nowhere near the amount of money you've raised in your career. I'm probably hovering around 25 to 26 million that I've raised. But I use all private capital for all my real estate transactions. And it's always a conversation that comes up is how do we raise money? And people are asking me, and I'm typically answering them in the best way I know how. But I would probably ask you the same question. Is there a difference raising money if you're trying to raise $500,000 compared to $100 million as far as the tactics?
Okay, that's a very good question. And I'm taking notes so I don't forget to ask you questions. No, it's the same principle. So let me describe actually what's going on. So for the first few decades of my career, when I was raising capital, up until 2012, actually until 2013, 14, when the laws actually promulgated from the Jobs Act of 2012, you had to have a pre-existing relationship with somebody in order to be able to solicit. And there's a whole story about why that happened behind that. It doesn't really matter. It's beyond the scope of our conversation now. So think about that process. What is that process? Well, that process is networking. You might start with friends and family. And as you get bigger, you might ask your accountant or lawyer or financial planner to make some introductions. Friends and family might make introductions, but each time they do that, there's a process to getting somebody to invest with you. And that process is the same. It's always the same. That process is to help them get to know you mostly, right? They want to you're asking them to invest with you. So it's less of a two-way street, it's more of a one-way street. They want to learn who you are. So you meet with them. You have an initial exploratory meeting or phone call, these days a Zoom call maybe. So pre-2012, you would have those initial conversations. Each one of those conversations then always has a follow-up, right? So you meet them the first time, say, yeah, I'm interested. Tell me, I'd love to know more about that deal you told me about. Can you send me something? Right? So you would send them, you'd FedEx it or fax it or whatever, right? You'd send them some more information. There's always a next step. In digital marketing terms, a call to action, a CTA. So there's always a CTA. And then that process of one-on-one interaction would continue until such time as you actually ask them to invest. Now, if you're lucky, they might tell you, no, I'm never investing with you. If you're unlucky, they'll just string you along for, in some cases, years and years and years before you realize that they're not actually going to invest with you, or they might convert. Nothing's changed. That is the same process that you have to go through online, no matter whether you are starting out or whether you are, like our clients, have hundreds of millions of dollars of AUM. Mm-hmm. What's changed is how you communicate and how people learn who you are. The three pillars of, I say it's the three pillars of online marketing, but actually it's the three pillars of any kind of marketing, in person or online. They have to come to know, like, and trust you, right? Those are the three pillars. So the advantage of doing it online is that if you do it properly, and this is what we do for our clients, we build these communication systems for them, basically. What you do is you preempt all of their questions and what they might want to know about you by answering them on your website and actually on social media. LinkedIn is one of the best sources, YouTube and etc., other platforms as well. So you populate that with preemptive answers or answers to their questions, preemptively answering their questions, so they can do research on you using, as I'm waving my phone, this prop, their phone or their computer. Mm-hmm. So that is that was the switch that was thrown with the Jobs Act, was that you don't have to do it in person. You can now do it online, which means what? Means you can scale. Okay. And it allows you to establish a relationship with, or actually for investors and prospects to establish a relationship with you without you needing any contact with them directly. No phone calls, no Zoom, no in-person meetings. You don't need any of those anymore. Mm-hmm. I'll stop there. That's why it's basically the same no matter what you're doing. The psychology of raising capital is the same. The methodology that you use is the only thing that's changed.
Well, and I love that you said it doesn't matter how much you're raising, because to me, when I started in real estate in 2003, the same methodology that I did then is what I do now as far as buying and selling real estate. The numbers have changed, but the process in the real estate in and of itself is a pretty simple business. It's the effort that is what most people lack. But just the process of buying and selling real estate and cash flowing it, whatever it's in, it's not that tough. I think most people's hang up on raising money is they feel like they're asking for a loan versus giving somebody an opportunity to invest. It's the mindset. And given that you've raised as much as you have, how did you set your mind in the early days when you were raising money? Was it easier when you were an employee for somebody else, or did that put more pressure on you as an employee?
That's a really interesting question, actually. I've never been asked that before.
You're welcome.
Yeah, that's a good one. No, it hasn't really changed. And you've actually caused me to cast my mind back. And the way that I'm going to answer that question isn't a direct answer, but I'll try and navigate to a direct answer. Is it different for myself or is it different for other people? When I think about how I did this originally and have always done it, is I feel, and this is a personal
Mhm.
response, personal reaction. I personally feel a very deep sense of responsibility when I'm raising capital to be absolutely certain that what I'm raising capital for is a good opportunity. And that means I need to know everything about that opportunity at a granular level, at a level, DNA level.
Mhm.
I want to know, I do not want to sit there and be asked a question I cannot answer. And I know that sounds improbable, and there are always questions that somebody will ask that's, out of the blue. But I really want to understand a deal absolutely before I am willing to say invest in this deal. So the difference hasn't really changed. It's the same for me. It's the
Mhm.
same thing, whether I'm doing this on behalf of somebody who's paying me a salary versus somebody who is, I'm sorry, versus raising capital for my own deals. It's the same, I won't do it if I don't understand everything about it and don't have total confidence. Right? And I've got a PhD, so I dive. I am I am wired to follow every single line of research
Mhm.
to its terminal point. There is nothing else to know, and that's. I'm going off on a tangent now, but that is the discipline that comes with getting a PhD, is to follow every single possible line of investigation and exhaust them completely. So you become the absolute authority in your field. That's how I approach capital formation. And it doesn't, for me, it doesn't differ whether I'm doing it for myself or on behalf of others. I haven't done it very much on behalf of others, to be candid. I've usually done it on my own account. But these days, it's the same. What we build for our clients is at the same degree of detail and understanding of what's going on behind the scenes.
Well, we have a lot in common. I also have a PhD. However, mine is a public high school diploma. And so
Well, you know
I,
what the best PhD is? The one I really wish I had. Papa has dough.
oh yeah, yeah.
That's the one I
Well,
really want.
yeah, but that one you just don't learn to respect as much when it's given it to you or handed to you. But
I don't know. I'm willing to be disrespectful, but anyway, it's well
I'm
gone.
willing to be adopted by one of those papas as
Yes,
well,
exactly.
for
Open
sure.
for adoption. Sorry,
Um,
gonna cut you off.
but no, for me, I didn't
Mm,
have any of the data. I didn't have the background or the education as you have, which is fantastic, right? Like you can articulate in a different way because of your education and your PhD. For me, it was always street smarts and figure it out as I go. And I got really good at reading people
mm,
to be able to talk to them in a way where they didn't feel like they were being talked down to. You know, I talk to everybody as if we're equals because we are.
mhm,
Somebody is better at something than I am, and I'm better at certain things than they are. But we're all just humans. We're all just equals and good at
mm,
certain things that we're experts at. Um, but in raising money, I have just found that probably talking about my failures and my mistakes as I do on this show literally every week
mm,
has fostered more investors than going out there and beating my chest and saying how many great deals I've done. Because like you, I need to be able to sleep at night and know if I'm putting my investors' money into this deal, I can't guarantee everything's going to be roses. Nobody can. But I can guarantee that I will dive on that sword and I will to my dying breath fight to defend their money. And that's what brings people to people like us, right?
So you said a couple of things. I'm just going to spin back to one, and then there is a fundamentally important differentiator today that you just described. I'm just going to pull that out. The first thing actually that you talked about, just a side note, is you talked about street smarts versus education. So what? I mean, when I started, I knew not when I started raising capital for ground up multifamily, I really didn't know anything. I used to have breakfast with the guy. I was, he was a friend. I knew him from whatever. I knew him. It was a family office. He was running this thing. I'd have breakfast and he would tell me about his business. And I thought, oh, that's really interesting. He showed me a pro forma. I'd never seen one. I didn't have any clue at all. None at all. So it's so irrespective of your background, the key idea that you just described is integrity. It's having integrity. It's not something you can really learn. It's something it's just innate, right? You either have high integrity or you're not, right? So what you've described, you're a high integrity guy. I am too. I want to do the right thing. Okay, so let's just jump to the second point that you made. It is extremely difficult to raise capital today for two main reasons. And these are all long discussions, but keeping it brief. One, a lot of new investors or new sponsors have come into the industry since 2012. And I'll just be candid, I'll just be rude about anybody who's listening or maybe gone through this.
Oh, we don't care. We're rude here all the time.
All right. So the weekend gurus who teach how to buy and invest in real estate. I'm horribly rude if it's something that maybe people associate with. But anyway, that don't really have the kind of background, certainly that I have. And I see these and I just think you cannot use templates. You can't do this. You're losing into, you don't have to, you have to have the integrity to build this from the ground up, a spreadsheet, a pro forma. You got to build it because you got to understand how it's structured and how it works and what moves inside it. For example, templated stuff doesn't work. And so investors have been seduced by excellent marketing, all templated, and have now lost a lot of money, right? A lot of investments over the last 10 years or so have gone bad. And you don't hear about that a lot. And there's reasons for that. There's structural reasons why you don't hear about it. It is significantly more prevalent than anybody really understands. That's number one. Number two, incredible uncertainty about the economy. Geopolitically, economically, it doesn't matter. I am apolitical in any kind of conversation. But that is a drag on investor sentiment. So this is two major headwinds. The third, actually, is the noise that is now being created in the market from not only these literally thousands of people that are out there who've got these weekend diplomas, right? How to invest in real estate, how to buy real estate, how to raise capital, and et cetera, all using templated stuff amplified by AI. The noise level has gone super high. So it's extremely difficult for guys like you, Derek, to go out there and raise capital from new investors, not those that you already have because they know, that you perform and that you do well and et cetera, communicate effectively. It's difficult to find new ones because of this noise. So there is only one thing that you can do. If there was one thing that anybody took away from this conversation, it would be this word: authenticity. That's exactly what you were describing. The mistakes I've made, right? And when you talk about that, but people relate to that. Nobody's perfect. People understand that. And if you can swallow your pride and describe, okay, look, this is where I went wrong. I made a mistake. You opened this call with that exact same thing. The first thing you did.
Yeah.
It was kind of a trivial example. But when you're raising capital from people, you want people to get to know you, you have to be authentic. You've got to find those thoughts in your mind that are truly unique to who you are and speak to those ideas. And That's how you attract people who are like-minded, who think the same way, who just plain like you for that. And that actually is very difficult to do. It's what we do for our clients. It's how we help them come out of themselves.
Hmm.
It's a process for doing that, but it's a one-time only process. But that's how you stand out today in capital formation. Basically, is being authentically you.
And that goes across capital formation or anything that just goes across your life in general. Being authentic is going to it's going to rub some people the wrong way. It will. I mean, I'm not everybody's cup of tea all the time, but people know where I'm coming from at all times. They don't have to agree, and I don't expect everybody to agree. Unless they're listening to the show, then damn it, everything I say is the gospel. But the reality is, nobody really has to kind of guess where my head is at because I'll talk to you about it and I'll let you know. If you have a question, damn it, ask, and let's have a discussion. And that's been one of my driving forces for the last couple decades in this business is the people that hide behind um kind of hide behind social media or hide behind a keyboard or their phone, right? Like people that want to start fights with you on social media because they're in their basement in their underwear and they have nothing better to do with their life. They're internet trolls. We have that same thing in business. When you talk about people that are just, I don't want to piss anybody off directly, but virtual wholesalers is one where they're just flinging offers at anybody that's got a
Oh, I
property
see.
on the market. And by the sheer law of averages, somebody's going to accept that offer. To me, I don't really feel like that's running an investment company. I just feel like um, but I'm also old school, right? I love talking to people in person, on the phone, wherever it is.
Okay.
Um,
All right, so let me just jump in and make a point there. First of all, what you're describing is spam. I don't like that at all either, and we just shy away from it. It's not the kind of business that we operate in, I operate in, and so you and I are on totally the same page. But let's put that exact concept in back into the context of capital formation online, right? Syndicating real
mhm.
estate online, the original theme that we've kind of been threading
Yeah.
through this conversation. The way to think of that is, and it's actually quite difficult to be authentic. There is usually a moment of authenticity when you see something or you think of something that is inside your mind, right? You react to it in a certain way. And then what happens? It's called it's actually not called the moderation, the accommodation syndrome or something. Anyway, there is a process that goes on, psychological process, where you then translate that actual thought that you have into what you think other people want to hear from you about that.
Mm.
So you end up projecting what you think other people should be hearing from you, what you think they will like to hear from you, not what you actually think. Okay. So, how do you overcome that problem? All right. It's not so difficult, actually. It's the bell curve. So, you've got a PhD. So, you remember from your your high school education. I'm sure
Yep.
you've got much better education than that, but you remember from your education the bell curve. And the bell curve, for those that don't remember, is this idea that grouped around the middle of any statistical analysis is those people in the middle. When you go online, you're talking to millions of people, like literally millions. You have the opportunity to be in front of a million. So that bulge in the bell curve is all of those people who are indifferent. They don't care. And as you move out to the left, 3 standard deviations, a little more statistically specific, you get to all of those people who, when they see you, think you are the biggest loser they have ever seen in their life. They do not like you at all. They're the trolls that are out there. Okay? That's inevitable when you are online. However, on the other side of the bell curve, exactly 3 standard deviations and more away on the other side, there are those people who love everything that you say. They love everything, and they are just sitting there waiting to invest with you. Those are the people that you should address all your communication to. You'll never be everything to everyone. Again, it's your comments exactly, right? You're not going to be everyone. You're not going to be everybody's cup of tea.
Mm-hmm.
But think about those people who adore what you're doing, who love what you're doing, your best investor. They read all your newsletters. They read your updates. They're on your webinars, right? They invest in every deal. Actually identify one of those people. And when you create your content or communicate, just think, I'm communicating to that person. And when you do that online, thinking the bell curve, what happens? You attract other people like that. And you don't need to attract that many of them to change your life.
That is, that's what I meant, but described way better. No, I mean, when people ask me about this all the time about, raising capital and stuff, you have the way of explaining it using, the bell curve, and my explanation is similar, although it's just, I don't want to be around people that well, I'll just tell you what it is. I have a no assholes policy in my business.
Mm-hmm.
Like, I don't want to deal with people that are hard to deal with. And I've had investors that have offered to invest and throw a lot of money in our direction over the years. And I just knew, without a bell curve, I just knew in my gut, this person is going to be so hard to deal with. Like, they're going to suck the energy out of me and suck the fun out of every day. And we turn them down, And I love the way you just described it. Like, when you focus on the people that are on the side of the bell curve, that those are your people. They resonate with you. You resonate with them. You don't have to focus on the rest. When I was learning to kind of do public speaking and stuff, because I know it's shocking, but this wasn't natural for me. That was one of the things that a mentor of mine told me early on. He said, so many people go into a room, whether there's a dozen people or 1,000 people in that room, and they'll find the one or two people in that room that are just sitting there like this, arms crossed, don't want to be there. And you'll focus on that, and you'll just screw up your entire presentation instead of focusing on the majority of people that are leaning forward in their seats and they're taking in every word you say. And that's the side of the bell curve you want to focus on. The rest
it's funny you should say that, actually. I'm going to give another example that you remind me of, that is the same concept.
Mm-hmm.
So when I started this business, I knew that I was going to have to start teaching, basically, right? Communicating myself. And as fortune would have it, or luck would have it, I was approached by the local university, short story, to teach a course on real estate investment and finance. It was kind of wacky. The guy that they had lined up pulled out, and I was called by the professor, head of department, say, listen, I heard about you. Can you teach this course? I said, sure, no problem. I said to him, when should I start? He said, Monday. He goes for the whole semester. So I got to put together a whole curriculum for a semester. But what I learned was this. It's the same thing, slightly different from what your mentor told you. So you're there, and it was actually a lot of fun because I used all my marketing skills to get kids to come and join my class, like some really cool stuff I put out there and emailed. And so I had hundreds of students joining my class. I actually had to do 3 of them. They only expected 1 class, but they actually had to put on 2 more. So I had hundreds of students. And what I learned was, so you've got this big lecture hall, stadium seat kind of thing. And along the back row are all those who don't want to be there. Right? They've got their laptops open, they've got earplugs in, and they're probably playing games or watching movies. They don't want to be there. Then there's a band in the middle. Again, this is the bell curve. The band in the middle, the vast majority, who are just, they're there, they're kind of diligent, they're going through the motions. They want to get a grade, that's fine. But there's always those on the front row. Actually, I found, when you talk about a lecture hall and public speaking, It's a small minority who are sitting on the front row who are glued to every single word you are saying. They are loving everything, absorbing what you say like a sponge. Those were the people I would teach.
Hmm.
And their positive their reactions, their nonverbal communication was positive reinforcement. And that's the same thing. It's exactly the same thing that we're talking about with the bell curve. The challenge online, of course, is that most of the time, you don't get that positive reinforcement.
Right.
People, right? And if you're looking for likes and whatever nonsense on social media, wasting your time. So you are speaking to an empty room. And that's actually the challenge, is having the confidence to just persevere. All right. And then when it comes to the rub, when you're actually raising and you're actually asking people to do something reciprocal, right? I've given you all this good communication, everything. Now it's time to invest. That's when you discover, it worked.
Yeah. Yeah, for sure. Well, Adam, I've got one hard question for you that I'm sure you can handle. And here it is. What is one question I should have asked you that I did not, and it can be about anything?
That's an interesting question. Yes, I've actually got a fun one, actually. So I just published a book, but I can't publish it. You didn't ask, right? So I published a few books on real estate and other topics, and some whatever. But I just published, but I can't actually publish it because I got to go through some IP stuff first. But check this out. So I just created this book. It's got nothing to do with real estate, and I can't send it to anybody, so I'm not
Yeah.
selling anything. I was telling my wife, I want to write this book when I retire. As I told her, I've got this book I want to write when I retire. She said, "Why wait?" Well, I thought, oh yeah, she's probably right. Why not? I don't watch TV,
Yeah.
so something to do. So I wrote this book, Afternoons with an Idle Genius. It's a tome. It's a thick book. It's about
Yes.
700, 800 pages long.
Jeez.
And it's I'm a big fan of P.G. Wodehouse. So I don't know if you probably don't know who that is. You probably know who Jeeves is. Have you ever heard of Jeeves?
Yes.
Jeeves, and he's a gentleman's gentleman. He's a valet.
Hmm.
And his gentleman is called Bertie Wooster. Anyway, P.G. Wodehouse wrote this series of books. I've read them dozens of times. And throughout these books are allusions to Latin and Greek mythology and poetry and history and Edwardian culture and all kinds of stuff that actually I studied when I was at school. I had a classical education in England. And so I decided to pull out all of those systematically and write short essays about each one of them. So that's what this is. It's like you don't read it from cover to cover, you open it up. We sleek it, timorous, cowering beasties. What the hell's that? Shuffle off to Buffalo. Whoever loved that loved not at first sight, Shakespeare. Oh, it's not Shakespeare. Who is that one? Christopher Marlowe. So I went through all of these and I pulled them and I put together this kind of book of essays, but I'm not sure if I can publish it. So I'm working with an IP attorney to see if I can.
It's almost like a daily devotional. You could read one essay per day.
You could, yeah,
Fantastic.
just a little bit of education. Anyway, so the question is, what do I do in my spare time?
My question would have been, why would you want to retire? Your wife said, don't wait till you retire. What's the point of retiring when you're having
I've
fun
got
doing
no
it?
idea. There's no way. I cannot imagine retire. I have a house on the coast
Mhm.
that is surrounded by retirees. Derek, they wander around bored out of their tiny minds. All of them bored stiff. They don't know what to do with themselves. They've got beautiful views, sea breezes, gorgeous houses, and they are bored.
Yeah, I've only been talking with you for about 45 minutes, and I cannot see you retiring before they're throwing dirt on your box. And I'm the same way, by the way. I have
Yeah.
no goals of ever retiring. But there is a difference between having to work and wanting to work.
Mm.
And very much that's the goal, to be in the wanting to work. So
Can I ask you a question before we wrap up? I don't know how long these things are supposed to be.
I have no hard cutoff. So you ask
All right,
away,
so let me
Adam.
ask you a question. All right, so you've raised 26 or so million. So do you raise for your own deals or do you raise for other people?
Everything I've raised was for our own stuff. So we had
And what
our
do you
own.
what are you in? What's your asset class?
Well, previously I co-owned a hard money lending company for 10 years.
Oh, okay.
And so we raised quite a bit of money for that. Um, right now, what I do is for the most part residential real estate
What
and
kind?
just single family. I work with a lot of people that are in default on their mortgages,
Hmm.
creative deal structuring. In the last 60 days, I've stopped three different foreclosures on people's family homes, and there's a
Wow.
certain clientele that I want to work with, that got into financial trouble, but not because of anything that they did directly, right?
Hmm.
So medical issues, things beyond their control.
Hmm.
But I'm also I'm working actually putting together a syndication as we're recording this. Probably be ready as this is coming out, but working as uh, a GP in syndication to redevelop a waterfront resort in northern Wisconsin that we're going to develop
Oh,
into 18 single family condo homes. So so that'll be a raise that I'll be doing here. And if you're listening to this today, that paperwork may be ready, and then I could actually talk about it. But as I'm recording this, I can't.
all
Kind
right.
of
Well,
follow the rules.
interesting. Yeah. Ground up development's interesting and condos also interesting. Do you have the 10-year tail in Wisconsin?
No,
10-year tail. You know what that is even?
I've heard of it. I don't know that I could explain it, so you might as well.
Well, I don't know if it's something universal or national, but in California, if you sell a condo, you or build and develop a condo, you are liable for construction defects for 10 years. And so there's this little army, whether you sell them or not,
Hmm.
whatever you do. So there's this little army of lawyers used to have discs. They don't have discs anymore, right? It's
Yeah.
a floppy disk. Who just keep track of all the condo developments, and in the final year, year 10, or year, at the end of year 9, they write to all the homeowners and say, anything wrong, we'll get you money and you give us 30%, and then they sue. So it can be quite traumatic.
I have a feeling that's a California thing because
It may well be.
I've
But
not heard of it here.
I'll give you another example of. I know you're working on this, so just if you don't, I'm just chatting
Hmm.
openly, a bit of
Chat
a
away.
chat.
Chat away.
So there was when I worked for East West Bank, I ran. Yeah, I told you I worked on special assets. I sold a lot of their non-performing loans, all real estate collateralized, and I met some really interesting people. This was way before AI. When was this? 2008, nine. It's a long time ago. Stone Ages, technologically speaking. But I met a lot of interesting investors, people who bought these notes and one way or another got to the real estate. One of them had a really interesting model. What he did in LA at scale was he would develop condos, and you've got to have a homeowners association, right? You'll have an HOA. So he would finance these things, and then he would sell slightly fewer than 50% of the condos, and he'd keep more than 50%.
Mhm.
So he always controlled the HOA, basically continued to manage the whole project, made all the decisions about maintenance and ongoing whatever, right? He managed the whole thing. But by selling off half or just under half of the units, he cleared his debt and ended up, or the majority of it, with these incredible rentals and everything else he rented. So he had this ongoing income, no debt, full control, managed it all the way through the 10-year tail, and either held them or it was a
Mhm.
really interesting model. And he did it serious scale, this guy.
Yeah.
He was hundreds and thousands of units he had.
Well, the good thing is after I stop recording this and nobody else gets to listen, you and I are going to keep talking. So, those of you that, want to know more information, start your own podcast. No, no, that is one of the best parts about having this show, Adam, is to have conversations like this with people that, in general, we wouldn't probably cross paths in another 100 lifetimes, right? But we get to then have these conversations now because of this platform and because of what you do and what I do, which is why I love putting this out there. And I love being a connector. So people listening to this show, um, you can get connected to people that I've had on as guests in the past and things of that nature. But well, Adam, what do you think? Should we wind this down?
Yeah, I think it's a good time.
All
Yep.
right. Well, I do appreciate you, just your knowledge and just fun. I love just chatting with people that are fun to talk to.
Yeah, feelings mutual. I really enjoyed this conversation, Derek. Thanks.
All right. Well, the rest of you, Adam and I are going to keep talking, but for the rest of you, we'll see you on the next show. Until then, live your vision and love your life. See ya.